Bitcoin explained. Should you actually own it in 2025? In 2024, Bitcoin went from 26 grand to nearly 100 grand. If you invested just $5,000 at the start of the year, you could have had almost 20 grand right now. But here's what nobody's telling you. Bitcoin could also crash 50% tomorrow. And there's literally nothing you can do about it. So should you actually own it? Let's break down exactly what Bitcoin is, why it matters, and whether it belongs in your portfolio in 2025. Part 1. What Bitcoin actually is. Bitcoin isn't some magical internet money created by a dude in a hoodie. It's a digital currency that runs on something called blockchain. Basically a ledger that nobody owns. Everybody verifies. And nobody can cheat. Think of it like this. When you send money through your bank, the bank is the middleman. With Bitcoin, there is no middleman. Thousands of computers around the world verify every single transaction. It was created in 2009 during the financial crisis when people were angry at banks for literally destroying the economy. One person or maybe a group using the name Satoshi Nakamoto said, "What if money didn't need a bank to work?" and created Bitcoin. Here's the difference that matters. Your $5,000 in a Fidelity brokerage account is backed by a company and insured by the government up to 250 grand. Your $5,000 in Bitcoin is backed by math and the belief that other people will want to buy it from you later. That matters more than you think. Part 2. Why Bitcoin actually matters. 2 years ago, Bitcoin was still considered a get-rich-quick scheme for crypto bros. Today, major institutions are buying it. BlackRock launched a Bitcoin ETF. The US government is holding Bitcoin. Companies like MicroStrategy have billions in Bitcoin on their balance sheet. This isn't speculation anymore. This is institutional money. Here's the real story. If you bought Bitcoin in 2015 for $500, you'd have over $60,000 today. That's a 12,000% return. The S&P 500 over the same period? About 250%. Even with all the crashes and chaos. Why does this matter? Because Bitcoin does something no stock does. It's uncorrelated to traditional markets. When the stock market crashes, Bitcoin sometimes goes up. When the stock market booms, Bitcoin sometimes crashes. That's actually valuable for diversification. I'm not saying Bitcoin is better than the S&P 500. I'm saying they move differently. And that difference has real money implications. But here's where it gets real. Bitcoin is volatile. In 2022, it crashed from 69 grand to 16 grand. That's an 77% drop. In the same period, the S&P 500 dropped about 18%. If you panicked and sold at the bottom, you locked in that loss forever. Most people do exactly that. Part 3. Should you own it? This is the part where I'm going to be honest with you. Bitcoin is not a replacement for your Roth IRA or your 401k. If you're not maxing out a Roth IRA with S&P 500 index funds, you should do that first. That's boring. That's guaranteed growth. That's how regular people build wealth. But if you've got 5 to 10 years of emergency savings, you max out your retirement accounts, and you have money sitting around that you genuinely won't need, Bitcoin deserves a tiny slice of your portfolio. Notice I said tiny. A reasonable Bitcoin allocation looks like this. If your total investments are $100,000, maybe you put $2,000 to $5,000 in Bitcoin. That's 2 to 5%. If it goes to zero, it doesn't destroy your financial future. If it goes to $200,000 per coin, you made a meaningful gain without gambling your retirement. Here's what actually matters. Your behavior. The best investment is the one you won't panic sell during a crash. Most people shouldn't own Bitcoin because they will panic sell. Most people should own an S&P 500 index fund because they'll hold it through chaos and come out ahead. If you do decide to own Bitcoin, buy small amounts regularly. Don't try to time the market. Buy $200 a month through a platform like Fidelity or Robinhood. When it crashes, you buy more at lower prices. This is called dollar cost averaging. And it's the most boring, most effective way to own anything volatile. Closing and CTA. Bitcoin is real. Institutions own it. It's here to stay. But it's not a replacement for boring traditional investing. Your boring Roth IRA is your wealth foundation. Bitcoin is the spice you add after you've got the foundation solid. Before you click away, I need you to do one thing. Subscribe to this channel right now. We break down exactly how to make money decisions in 2025. And you're not getting this information anywhere else. Hit that subscribe button. Turn on notifications. And I'll see you in the next one. Word count: 847 words.